Good afternoon, traders. Welcome to our exclusive interview with Forex Live's editor, Adam Button. We're going to talk about the economy, obviously the Fed, and definitely some great central bank and some gold action here. Adam, how you doing?
Doing great today.
Good. Thanks for coming on. So obviously we got to get right to the Fed because that's what's driving the market right now. I know we had 7 different Fed officials speaking this week, and they all are seemingly trying to backtrack on what Bernanke said last week. What's your take on the Fed here, and what do you see with tapering?
I sympathize with the Fed somewhat here. Bernanke came out, laid out a very clear program for tapering, what it was going to take, gave firm numbers on the economy. The market took it and ran with it as if it meant tapering was imminent rather than tapering was conditional. And, to some extent, you can blame the Fed as well because, maybe Bernanke could have been more clear. Maybe they could have prepared markets a little more ahead of time. But what we see is, today especially and over the last few days, is just a repeated effort by the Fed to tell the market that this isn't going to happen unless the economy is stronger. And, ultimately, a stronger economy means better corporate profits. It means higher stock prices. And I think the market has come around to that over the past 3 days, and that's led to this rebound in the stock market.
Yeah, I mean, it's hard to believe that the Fed is going to taper with inflation at 1%. I mean, you got to look at the dollar, and you have to say the dollar is telling you, along with recent inflation data, that there is just no inflation anywhere.
Yeah, I'm a big believer that inflation fears have been overdone for the last number of years. Inflation, it's very difficult to manufacture inflation in the current global economy with production in China so cheap for consumer goods. Manufacturing processes are just a constant downward pressure on inflation. And it's very difficult for the Fed to muster up an argument where we can have 2% inflation or higher than 2% inflation at any time in the next number of years. I think they're using that as a bit of a crutch because the Fed's more concerned about the financial risks of having such a large portfolio. I mean, this is really uncharted territory, and at some point, everyone on the Fed sat back and looked and said, "Hey, we're just taking too much risk here, and we could be skewing the market. So, how do we climb down off of this?" And I think that's what we saw last week.
I guess another question then is if the Fed can climb off of that, but that's a question for other people to debate.
That's really going to be the great question. But it might be years and years before we find out because they can just roll over the portfolio, like infinitely.
It's almost like it's Pandora's box here. Once you've opened it, you can't put it back in the box.
Yeah, I mean, we see with Japan and years as well, and it'll be a conundrum to answer, and the market will throw these periodic fits, and ultimately the cool heads are the ones who win out. I think what really happened on Monday when we had that 30-point drop in the S&P 500 and really the market's keeling over was you had investors calling hedge funds and demanding redemptions and same thing in bond funds, and it skewed the market in such a way. I think it got to be an extreme day, and those opportunities, they're going to be frequent over the next number of years.
That's an interesting piece of insight there. That we're going to have such volatile days over the next few years because that's not what people back home want to hear. They want to.
Everybody would love to just pick up the newspaper every day and see a 0.2% rise in the S&P 500, but it's not going to be that sort of steady rise. You're going to have these 5% declines, and then chop back and forth, and eventually, though, it does depend on the economy, and that's what the Fed is saying. So it's so important in this market to keep a close eye on the economic data and keep an eye on what it's telling you about the economy. And ultimately, it's a very straight line system at the moment, or correlation, where we're going to have higher everything as long as the economy improves, regardless of tapering. Sure, tapering is going to cause these periodic fits, but ultimately, good news is good news.
I mean, yeah, we've had some good news here. I mean, there's some the pending home sales data today was good. But you jump across to Europe. I mean, Europe's economy, they haven't gotten too much good news. I mean, less worse news, maybe you can call it less worse, but haven't really seen too much good news in Europe. And with Draghi really reluctant to do anything other than keep making promises, do you see any hope for Europe right now?
Yeah, the euro especially right now is looking very soft. You broke through the 200-day moving average to 55, the 100-day, all in the last couple of days. Through some retracement levels as well, and it looks soft. And if you look over Europe, beyond that, you have periphery yields, yields in Spain, borrowing costs up higher. They're down today, but they've been progressively rising over the last month. Uncertainty in Italy in regards to politics. I mean, you have basically the leader of the country being, or Berlusconi, the top politicians, being charged in criminal cases. There's no coherence in policy outside of Germany, and Germany just wants more austerity. It's difficult to see what growth will come. And the ECB, we lean on them to create growth, but they can only do so much. They make booming sort of cutting edge that it once was, and that's really a good bellwether for understanding how well Japan is doing, how well it's innovating, the car companies as well. But in a way, the culture has been damaged. It's 20 years of this stuck in this cycle of no growth, no inflation. I think that's what the Fed's really worried about as well, is you get this ingrained stagnation at some point, and Japan's really, like I said, gone all in to try to beat it, but will they succeed? The odds are against them. They had to try, and ultimately they will weak in the end, and they want to stick with this agenda. The elections in Japan last week showed it was a popular agenda. So, it might not be the last card they have to play, but it's, it'll be instructive for the global economy, and it's certainly going to hurt the yen for the remainder of the year and onwards.
Yeah, we can only hope that it ends well, right? I hope that they don't send the yen in a downward spiral, and then because that'll flow over into plenty of currency markets. Because I know that the yen's a great borrowing currency from a lot of traders who do carry trades, especially over in the Asia region. There's a lot of the carry trades that go on with the Aussie dollar and the yen. So if the yen starts spiraling out of control, who knows what that's going to do to interbank funding markets over there?
Exactly. It's such the world can be so focused on the U.S. and the slow recovery. But at the same time, you can have a crisis in Europe or a crisis in Japan, and it would completely tank the global economy, cause that volatility, and the way markets are connected, it would pull everything right back down again. In Japan, the debt in Japan is so, it's otherworldly. There's so much talk about debt in America, but it's far, far greater a problem for Japan. And, there's just no end to it. And eventually that day will come. Now, people have been saying that for 10 years, that Japan's debt's unsustainable. So you can't sit around and bet against Japan and wait for it. It was like U.S. housing during the bubble. It just grows and grows and grows until it ends. Or perhaps Canadian housing now, or Australia and New Zealand. It will end one day, and you just wait for it and deal with it when it does. But it's always going to be on the radar, and it will come.
Well, speaking of pop bubbles, gold is just on track for its worst quarter in 7 decades now? Something like that, since 1937, I think Bloomberg said. And another big leg lower in the last hour or so here. What's the deal with gold here?
Yeah, I've been very bearish on gold for the entire year. And, just as we were talking, we broke through $1,200. And that's a major level. That's a level where a lot of gold miners become unprofitable, so they start shutting down. The gold bulls will believe that the supply comes off. They stop producing, so it means less supply. It's going to draw a line under prices, but I don't think it will be as clean as that. I think with the momentum downward in gold, you really can't fight it. There are people who are married to the idea of gold, but they can only take so much pain. What is it, 2% drop today, about the same yesterday. It's death by 1,000 cuts at some point, and the market can capitulate. We saw it once in April we had that $100 down day, and I think at this point the risks are skewed more towards another day like that rather than some sort of sustained bounce, because the bounces are getting smaller and the market is getting more panicky, and it's not out of the realm now to be talking about sub $1,000 gold in the not too distant future.
I mean, it's just getting ugly in the gold market, but you have to wonder, at least for equity investors. I mean, with the lower price of gold, you think there's going to be some M&A and more, at least increased M&A as companies try to diversify costs out and look for economies of scale?
Yeah, that's a good point. We saw Barrick, who's the world's largest gold company. They were cutting staff last week. So it could be an effort to preserve capital. It would be interesting. This is a time, when like Warren Buffett says, when the tide goes out, you see who's swimming naked. It's like that with gold management. You could manage a gold mine, in the boom, and your stock price would go up forever, and you didn't have to control costs and whatnot. And now, it's about who is hedged, who can control costs, who can scale up and scale down. So there's value. There's going to be value in the gold market, because I imagine right now gold stocks are just being thrown out. Everyone's throwing them out the window en masse, and the ones that are well run will be taken over, or they'll rebound, or they'll restructure, and there are going to be incredible buying opportunities there. But right now I think it's a falling knife, and it's